Welcome. We are currently witnessing a defining moment in the 21st century global economy. In May 2026, President Trump landed in Beijing for a summit with President Xi Jinping, a meeting that many are calling the most significant event of our decade. But before the first handshake, a major clue was dropped. In a surprising move, President Trump pulled Nvidia CEO Jensen Huang onto Air Force One during a stopover in Alaska. When the CEO of the world's most critical AI chipmaker joins a diplomatic flight, the agenda is clear. This isn't just about politics. It's about the control of the future. This 15-minute deep dive will analyze the hidden layers of this summit, from the big deal involving semiconductors and rare earths to the massive rerouting of global capital that is about to begin. Negotiation at its heart is an exchange of leverage. Let's look at what each side brought to the table. For China, the priority is absolute: the lifting of semiconductor sanctions. To fuel their AI ambitions, China needs high-end GPUs. But as we know, a GPU is only as good as the memory attached to it, specifically high-bandwidth memory (HBM). China is pushing for the US to allow the export of advanced chips and the Korean-made HBM components required to run them. For the US, the bottleneck is raw materials. While the US has been moving its value chains domestic, it still relies heavily on Chinese rare earths for defense, electric vehicles, and even chip manufacturing itself. Building a self-reliant supply chain for rare earths takes at least 3 years. This creates the perfect big deal environment. Trump is using the supply of Nvidia's GPUs as a bargaining chip to secure the immediate flow of rare earths. For the markets, this signals a potential normalization of the tech supply chain, which could trigger a massive rally in semiconductor stocks. The urgency of this summit differs for both leaders. President Trump is under immense pressure. Recent U.S. producer price index PPI data surged to 6%, signaling a looming spike in consumer prices. With the midterm elections approaching, Trump needs an immediate victory to stabilize the economy. He needs to resume the export of American soybeans, beef, and LNG liquefied natural gas to appease his core voter base and lower energy costs. President Xi Jinping, however, is playing the long game. He sees this summit as an opportunity to elevate China's global status. While the U.S. often acts as a global policeman that inadvertently creates friction, China wants to position itself as the mediator. By stepping in to resolve crises like the Iran conflict, Xi is demonstrating that China can provide global stability where the U.S. cannot. This isn't just about trade. It's about challenging the U.S. dollar's hegemony and promoting China as a responsible global leader. One of the most complex layers of this summit is the geopolitical big swap. The U.S. desperately needs China's influence to bring Iran to a nuclear settlement. As the largest buyer of Iranian oil, China holds the financial keys to Tehran. The rumored deal suggests that China will mediate a 20-year freeze on Iran's nuclear program. But what is the price? China's likely demand is for the U.S. to reduce its military involvement in Taiwan. The presence of the Chinese defense minister at the summit proves that military security is at the forefront. Xi's third term focuses on one China, and if he can secure a U.S. commitment to stop weapon sales to Taiwan in exchange for Iranian peace, it would be his greatest strategic victory. For Trump, the choice is between a long-term Pacific commitment and a short-term win in the Middle East that stabilizes global oil prices. Historically, when a leader is facing a tough election, they often choose the short-term win. So, what is the final takeaway? We are entering a phase of pragmatic cooperation. Both nations are too intertwined to decouple fully, and both leaders have domestic fires to put out. For investors, the big deal means the following: semiconductors, a potential surge in tech stocks as supply chains normalize; commodity stabilization in agriculture and energy prices. As trade barriers drop, global capital shift back toward emerging markets. If the geopolitical tension in the Pacific cools down, even temporarily, the flow of global capital is being rerouted as we speak. This summit proves that even in an era of intense competition, the necessity of trade and the urgency of domestic politics can force even the fiercest rivals to the table. Stay analytical, watch the official joint statements, and be ready for the next shift in the global order. Thank you for watching.